Hello and welcome to this week's edition of the program Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. And in the program today, pension arrears grow to 27 billion kwacha as at mid-year 2022. We have a report, and also in the program, debate resurges on the gap between policy rate and headline inflation, which experts fear would have a huge repercussion on the economy. We have these and other stories. Stay tuned. Hello and welcome. This is Business Time, and in our main story in the program today, figures from the Reserve Bank of Malawi show that pension arrears grew to 27.9 billion kwacha as of June 2022. This is scary as it means that some potential beneficiaries would have to face a tall order to get their resources once they retire if the companies do not remit the resources accordingly. And our journalist, Justin Kwewu, has been speaking to some officials from the central bank as well as pension fund managers to find out what is at stake in as far as pension fund management and remittance is concerned.
Pension is one paramount thing for every worker, and they look forward to it when they retire, or sometimes in unfortunate circumstances when they get fired from their work. But it's not all employers who remit pension funds, and pension arrears have grown by 5 billion kwacha within a year to 27.9 billion kwacha. This was revealed during a luncheon which was organized by Zamara Pension in Blantyre. According to RBM Principal Examiner, Pension and Insurance, Shamiso Tsonga, the pension arrears have hit that amount while in 2011 there was 100% compliance. She added that companies are attributing non-remittance of pension funds to the COVID pandemic, especially in the past 2 years, which has dwarfed economies and businesses.
Mainly is due to the letters that we have received. The institutions are indicating that they're facing financial difficulties. They have financial challenges that have led to the pension contribution arrears. Mostly during this COVID-19 pandemic, we saw that there are some entities that we are struggling.
It was revealed during the engagement that currently there are 854 companies with pension arrears, of which 828 are private companies, while 26 are government enterprises. Tsonga said to reduce the problem of non-remittance of tax, the regulator has commenced legal proceedings against 21 companies for the malpractice.
As the regulator, we are issuing administrative penalties to those employers that have contribution arrears. And recently we got guidance from our legal team to take the prosecution route. So recently the registrar has commenced legal proceedings against 21 employers who were initially served with the administrative penalties. As you have seen through the presentation, the pension fund assets are now at 1.4 trillion as at June 2022. It's a huge amount which is invested in equities. It's invested in some entities in the country, and some of it government is borrowing and using it, and part of it is invested in property. And recently, you might have heard the Reserve Bank of Malawi Pension Fund is building a commercial property in Lyon out of the pension fund assets as well. So it's a huge contribution to the country.
Thank you. Despite the developments, the pension sector has shown growth over the years, with funds hitting 1.4 trillion kwacha by June this year. It was further revealed during the event that members of the pension sector have grown to 532,789 people by June this year from 73,833 people 11 years ago. Zamara Pension Managing Director Ekari Chauluka said the problem of non-remittance of pension is big and it needs to be addressed from all angles of the economy. Chauluka added that while it is important that there should be compliance in the remittance of pension funds, businesses need to have a conducive environment to spur their economic performance and remit the funds.
Yes, it is definitely a cause for worry, because ultimately the client who are trying to serve, which is the pension members, are being denied their rights and contractual benefits. However, we believe it's a multifaceted problem. Tough times for the employers given the reality of the economy, but also maybe it could also be an issue of governance and maybe ethics of leaders. So our plea in private and in public continues to be, as leaders, as people who are managing entities, let us make sure pension contributions are remitted on time to serve the member who is our employee today, as we have contracted them with such benefits in their employment contracts.
Employers Consultative Association of Malawi ECAM Executive Director George Kagi said in a separate interview that non-compliance is mostly because of the COVID pandemic, which has affected financial flows of businesses. He added that, however, that is not a justification for non-compliance, and the association has been advising employers to comply because even in the proposed amended Pensions Act, the penalties for non-compliance are heavier. He added that they have been advising employers to engage RBM one-on-one and discuss if they face difficulties on complying, and as an association, they have also arranged a meeting with RBM so that they discuss how best they can handle it. Pension is mandatory for every former employee in Malawi.
Now, the gap between policy rate, the rate at which commercial banks borrow from the Reserve Bank of Malawi as lend of last resort, compared to headline inflation, the pace at which commodity prices change in an economy at a given period, seems to be growing. Experts lament that if this is maintained, it will have a huge repercussion going forward. Figures show that the policy rate is now at 14% against a 25.5% headline inflation. There was a heated debate at the Monetary Policy Conference held in Lilongwe last week, where our journalist Chimwemwe Mangazi filed this report.
During a panel discussion, one of the panelists, who is also former chief economist at the International Monetary Fund, Godfrey Kalinga, called on the central bank to be decisive in setting the framework to avoid pushing the burden ahead.
We all want modernization. Nobody can be said to be against it. So the real issue are the systems that we have impeding our capacity to make the right decisions? I am not sure. In history, Paul Volcker in 1979-80 managed, with whatever crude systems they had at the time, to eliminate inflation in the United States within a 2 to 3 year time. Even in this country, Charles Sugar in 2012 to 14 managed to restructure the financial system and bring sanity to the foreign exchange markets and financial markets within a 2 to 3 year system. It's true the costs were high, but he looked at the longer run, not at the immediate elements. Using the crude or the monetary targeting, he managed to succeed. So we should not forget that decisiveness in decision-making and less fear is as critical as the frameworks that we do. Commenting on the other issues, number one, when one looks at the decade that we've just gone through in Malawi, it's not clear to me that price stability is enough as the sole objective of policy. I think we need to do more. We've gone through a period when I personally don't believe in most of the statistics that are published. I think growth is much less than is given. I think politics have driven the numbers more than production. And therefore, I would say growth has been more anemic, exports have collapsed, imports have risen to levels that are very high. In fact, if you look at some of the concrete examples, key industries have ceased to exist. I have in Blantyre a gentleman who used to operate Tame with very modern technologies, was producing all the trailers for Carlsberg. They closed. Reasons? The Chinese have taken over. The Chinese are good. They've delivered good goods for us. But between 2017 to 2021, the central bank and the authorities wanted monetary stability. So they fixed more or less the exchange rate. I think it depreciated by 2%. In an environment where the domestic prices doubled, Tame ceased to exist. They couldn't compete with the Chinese. The imports were much cheaper. Modernization, good. Looking at prices so that we can move forward, I think we failed. It is costly to do the right thing sometimes. My view is, in addition to an intermediate target of prices, we'll need to have something like a real exchange rate. It's important to have more than one explicitly. It helps in the communication process so that people knows the trade-off. For example, the governor just said they didn't raise the policy rate 1-for-1 because they needed to consider other considerations mattered. If those things matter, why not bring them explicitly? Why not form them part of the communication system? What appears to some of us when we hear the monetary policy being read is as if the central bank is pulling money, numbers out of a bag. 1 month inflation is 20, the policy rate is 14. The next month inflation rate is 25, the policy rate is 15. No, yeah, 15. Nothing is again 14, no change, no explanation, nothing. Credibility, I'm not sure. Explain more.
Reacting to the sentiments, Reserve Bank of Malawi Governor Wilson Banda justified the recent Monetary Policy Committee's stance to maintain the policy rate, which is seen way below headline inflation, rating the option as a systematic move to contain further pressure on the economy.
The rise in inflation has been very rapid. It's happened over a very short space of time. If we're to respond in the manner that theory expects us to respond, we should have the policy rate at levels above 25%. That immediately translates into higher interest rates across the banking industry, and that would obviously stifle growth and all other things. Clearly, the cost of borrowing would go up overnight. Clearly, the number of non-performing loans would go up overnight, etc., etc. Is that the right thing to do in the short term? I guess really you need to decide what we want to achieve. We want to bring down inflation, and I think, yes, we need to operate in that space. A very important point that Betty made, and that is we need support from the fiscal side. We can raise the bank rate to whatever levels overnight, but if the fiscal side is not responding accordingly, they'll still borrow. They'll borrow at whatever rate, and that will translate into higher monetary expansion, and that will come back to haunt us in inflation. At the same time, we would have sacrificed growth from the private sector. So we need to deal with those issues very delicately. When we met last time as a Monetary Policy Committee, the question that we had to answer as a group was whether we should allow time to pass before we really went back and took another look at that decision, because we were saying that maybe these issues are just transitory, and maybe after a couple of months we'll be back to the normal trend. So we shouldn't sacrifice short-term growth at the expense of issues that are very transitory, but also mindful of the fact that most of this expansion in money is coming largely from the fiscal side. So should we really stifle growth in the economy on account of what is happening on the fiscal side? I think that's an important point that Betty raised, and that's an issue that I would like to put on the table as well, that as we deal with these issues at the Monetary Policy Committee level, we have to also be mindful of what our decision does to the economy. Again, going back to the mandate of the central bank, our mandate is to ensure price stability, and that stability is both on the domestic as well as on the external side. But if we don't get that stability in an economy that is not growing, and then everything is going to be lost. We need to have some stability in the economy. The economy has to grow in order to anchor stability in prices. Otherwise, if it's an economy that is weak, Mr. Kalinga mentioned that growth in Malawi is probably a lot weaker than our numbers say. Exactly. I agree with him. Our statistics, they can be unreliable. And because our statistics are unreliable, we should be extremely careful in whatever measures we take to correct that situation.
The policy rate currently stands at 14%, 13.5 percentage points below headline inflation, currently at 25.5%.
Remember, this is Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. My name is William Kumwembe. We'll be right back. Welcome back. This is Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. And moving on with the program. Energy generation company Egenco says is impressed with the progress made this far in rehabilitating the Kapchira hydropower plant. The plant was partly washed away by heavy rains during the 2021-2022 rainy season, precisely in January, affecting the power generation capacity of the country. And as you might be aware, persistent power outages seem to be order of the day in the country. The generation company says it is hopeful that by December, Kapchira will be up and running. Moses Kwasa is spokesperson for Egenco.
We are very happy as Egenco indeed to confirm that we have started the work to restore power generation at the Kapchira power plant following the Cyclone Anna disaster that befell on us in January. And so far, we have seen that the work is progressing well, and we are happy. And we are very hopeful that come December, we should start generating power again from Kapchira power plant. Well, the work has been divided into two phases. The first phase is where we want to bring back generation as soon as possible. And in this first phase, what we are doing is to construct a coffer dam, which will help us reserve water so that we can generate electricity. At the same time, we are also trying to open up the channel so that we can divert water to the intake. In the second phase is now where we are going to reconstruct the dam to ensure that it is more resilient, so that in future, if you have cyclones like Anna, it should be able to withstand that and be able to continue to generate electricity. Well, I just want to assure Malawians that the work here is progressing well, and we are very sure that come December, we should be able to start generating power again from Kapchira Power Station.
Now, in other business news, the Malawi Bureau of Standards has reaffirmed its commitment to ensuring standardization of commodities and products available on the local market. Our journalist, Justin Kweo, caught up with the Malawi Bureau of Standards Acting Director General.
We are a national standards body. We deal with the standardization. We'll look at the development of national standards. At the same time, we also deal with the conformity assessment, just to ensure that the standards that we develop, I think when products have been produced, they conform to the standards. And at the same time, we also look at metrology. Metrology is the science of measurement. So when you're looking at measurements, you're looking at weigh bridges. I think those are issues that we handle. The usual trade scales was also we handle under metrology. And when you go to the feeding stations, the pumps, those are also an issue where we do the calibration. Yeah.
We haven't heard much about the issue of feeding stations and the pump. We only thought that it's about MERA.
No. MERA are the regulators of the fuel itself in terms of handling the fuel. But in terms of calibrating the pump, that it really dispenses 1 liter, that is our mandate. So the 1 liter, it is us who confirm that this is really 1 liter.
How have been your operations so far?
So far, the operations have been okay. Much as we have challenges, but I think we are managing them. It's just a matter of coming up with our priority list. Yeah. So we do manage business. I think in terms of operations, daily operations, I think we do have reasonable resources that can manage that. But in terms of development, as you can see, this magnificent structure, this was funded by government to the tune of, I think when it is fully done, it is going to cost 18.3 billion. Yes.
What should people expect, Malawians? What should they expect from this organization?
Yes, we are an institution that believes in continuous improvement. We know we have shortfalls, and we know that from the current premises where we are accommodated, we have some gaps, and realizing that the current premises has gaps. That's why government decided to fund the construction of this office. So when we move from the current premises to these premises, we expect a change in the level of service. Because in the current premises, it's not purpose-built, but this infrastructure is purpose-built. For your information, this is the third in SADC after South Africa and Botswana. So the gaps that we have in our current premises, we hope to fix those gaps when we're in here, because the labs here are purpose-built, and the areas where we are failing to do the tests, we will try to procure the equipment and then conduct or undertake a test. So people should expect an improvement in service delivery.
Well, that interview also brings us to the end of today's edition of the program Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, my name is William Mwembe. Always remember, if it doesn't make money, then it doesn't make sense. Stay safe and bye for now.